Welcome to XXIM podcast, where we dive into the cutting-edge ideas on decentralization, blockchain, and the new monetary systems. While the crypto world was obsessed with the next shiny thing, one team was quietly building something revolutionary.
We also have doubled the TPS of the chain, so that's the capacity of the chain, and now the network can process over 20,000 TPS.
In this episode, Ankit had a session with Mod from Alephium discussing their growing ecosystem.
Like as your ecosystem mature, projects become more complex and they take longer. In the beginning, your ecosystem starts from scratch. You have little things that get built very quickly, and that initial growth happened very quickly. The amount of contract, the 1,000 contract deployed, that was just this week.
Builders aren't just coming, they are staying, building and creating the future on Alephium.
It won't appeal to everyone, but for people who believe that proof of work is the best way to ensure a decentralized infrastructure, it's also a place where you can build all of the DeFi, all of the decentralized applications.
Supported by Casper.com, the leading Casper DeFi with DEX and lending. Igra Labs, atomic programmability on a Casper block DAG. Casper Finance, the first V3 DeFi protocol on Casper.
Good to see you, Maud.
Good to see you too. Thank you for having me again.
Awesome. So for anyone who's new to Alephium is a layer 1 Turing complete blockchain that combines proofoflesswork as its consensus mechanism with stateful UTXO and employs sharding to achieve scalability. Did I miss anything, Maud?
No, you covered everything. And it's a mouthful, right? It's just technology pieces. But I think just on the stateful UTXO, it's basically what allows our smart contract environment to mitigate some of the most exploited attack vector that you see in the space, like reentrancy, or any exploit that would leverage like the asset approval mechanism that you see on EVM chain. So this is what allows us to completely mitigate those and many more.
Yeah. So Bitcoin security, smart contracts from Ethereum, and is scalable on proof of work.
Yeah.
Essentially, right? Just a quick summary.
Basically. Yeah, exactly.
And I will put up a link here somewhere to, if anyone wanted to learn from our previous discussion, which we had a couple of months ago around the technology architecture, they can go and learn more about the technology. But for this session, though, I wanted to focus more on the ecosystem side, which is what I'm excited to learn about and excited to see what's actually been built or been building on the Alephium ecosystem. But let me start by asking, though, last time we connected, you were about to have the Danube upgrade, right? So what sort of metrics that you're achieving now on a proof of work solution?
Yeah, and so I think we spoke just before, and so the Danube upgrade has been live on mainnet since I think July 15th. I think it was the day. It was around there.
Right.
So we have really improved the performance of the chain. So the block time is twice as fast. So we now have a block time of 8 seconds. And this is really what people call the speed of the blockchain. This is really what user feels as the speed. And so 8-second block time on a proof of work chain with smart contract, that's pretty competitive. Like that's better than some proof of stake chain. Hello, Ethereum, and others. So it's really, it's a nice performance. We still have plans to take that further down, but it does take a little bit more research and optimization, but that's something we are looking into because for some area of DeFi, having a shorter block time will just make it even more interesting. Yeah. We also have doubled the TPS of the chain. So that's the capacity of the chain. And now the network can process over 20,000 TPS. So in terms of capacity, that makes the network pretty resilient to any upcoming mass adoption. We've done a lot of work also to improve the developer experience with a lot of things that have been automated or already abstracted to really, again, ease the development on Alephium. We've had then done also a lot of improvements to user experience. Obviously, the performance that I was mentioning impact directly the user experience, but there was also something about, you mentioned that we use sharding to scale, and sharding is a very powerful way to scale, but in a lot of time, it's at the expense of the user experience. And we already, doing sharding on the UTXO model allowed us already to have a very user-friendly approach to sharding, but you still had some little friction point. And with the upgrade, we introduced something called groupless address that basically at that stage, once it's adopted throughout the ecosystem, it's already used in our wallets. It completely abstracts the sharding for the user. So user gets the performance of a sharded chain with a single chain experience and without ever feeling that technical aspect of our chain. So yeah, that's kind of the highlights. There was a few more things, but I think yeah.
Those were the key things, right? And just quickly on the TPS and the sharding part, I think we talked about again sharding, that even Ethereum is looking at long-term solution as sharding, but specifically for Alephium, right? So you've got 16 parallel chains, which you're saying now it's abstracted away. So a user doesn't notice it, even though they are running in the background, right? And what about the TPS? So this is actual practical 20,000 plus TPS, or is more of a theoretical?
So right now we don't have usage for it. There's not enough usage on chain, and to be fair, it's not just on Alephium. There's not many chains that actually eat up that amount of TPS. So right now with 16 chain, the conservative theoretical maximum TPS will be around 800. But then we can deploy more chain, basically. So right now we have something called groups. So we have 4 group, 16 chain, and we can scale to 32 group, 1024 chain. And this is this 1024 chain that would allow the network to process over 20,000 TPS. And that's a pretty conservative number. If you actually, if someone is, doesn't know what to do this weekend, and wanted to go and read the white paper about block flow, which is a sharding algorithm, you'll see that the TPS assumptions that are made are incredibly conservative. I think, let's say the theoretical on paper is 50% higher than what we say. So before the network upgrade, the TPS that we were announcing was like 10,000 TPS, but actually the theoretical one is over 15,000. So we doubled it. So we are now saying 20, but in the same way, the pure mathematical number, you could push that to higher. But the point of the reason why we say this is we try, maybe we're not following the trend in the industry here, but we try to be realist, which is that at the time when the network has that much usage, that it will really eat up all of that, it is likely that most of the transaction will be smart contract transaction, which are heavier than just simple transfer. And so that's the reason why we chose to, in the end, being quite conservative in the amount that we communicated, which again, maybe that's not the trend of the industry.
Well, I think when you're talking about 20,000 TPS, I think that's a number not many people can throw, at least not on the proof of work chain.
Yes, not on the proof of work chain, that's for sure.
So I think if you're trying to be conservative, then I guess the bigger challenge then is to obviously get to that level. I think that's more of the challenge, how you build an ecosystem, which is why we are here today. But yeah, it's a big challenge. But thank you for that. Along with all the technical, I guess, upgrades as you've highlighted, I also read that you've had increase in miner participation since the upgrade. Is that actually true?
I don't know if we had increase. What we didn't have is a decrease, which is pretty good. If you look at the hash rate pre and post upgrade, it stayed pretty stable. there was a slight decrease, but the decrease is consistent with the ASICs being slightly less performant, because that's basically kind of what you have to balance in a proof of work chain, is that the faster your block time is, the harder it is to mine efficiently, the more uncle and orphan block you have. And so the slight decline in hash rate that you see is basically can be explained by just the ASICs being slightly less performant with the chain being faster. So the hash rate kind of stayed the same, which, if you look at our price action, actually is a testament of strength. Because usually, that's not what happened when we're in that phase of the cycle. Where we had a really great increase of the hash rate was last year, when the first ASICs kind of came onto the network. So I think hash rate is pretty good and pretty stable, which honestly we're pretty happy about.
Good. It's sitting around 19 petahash, right?
Yeah.
I believe around that 18, 19. I checked earlier, and it was 19. Which it was, I think it's a little bit higher than before the upgrade, I believe.
It's kind of similar. I think before the upgrade, it was around 20, and then it went to 15, 17, and then back to this, because it takes time, for pools to adjust, miners to adjust, and everything. But yeah.
And especially, I think the point perhaps you're highlighting here is the price action, because end of the day, miners needs to make sure that they are, staying with the strategy they have. They might be there to make profit, or they might be there to really support the chain, right?
Or they have a long-term vision, but the reality is they do have electricity cost that they do have to pay. Now and not in the future. But so it shows good support from the miner, and we're really grateful for that, because we are working hard to deliver as well, and continue to push the chain forward.
Now, I don't want to get into price action, because that's not the place for us. We don't discuss price action. So let's, I'm sure that's a question from everyone in the community,
We also try not to, right? Because it's the only thing that we can control. What we can do is, build good tech, support the ecosystem, and, and go with the flow. We are in an industry made of cycles. And if you want, you have to power through every phase of it.
100%. And I think, XXIM is definitely focused on the builders and the dreamers. So let's talk about some of the builders and dreamers within the Alephium ecosystem, right? So I was going through your this dApp database that you have, alph.land, right? And I saw that's got around 117 sort of dApps that ranges from anywhere from, wallets to DEXs to lending protocols. So really keen to spend majority of time today. What is the current count of the dApps that you have within the ecosystem?
I mean, I don't have the exact count. So on AlphBanX, it's more than just the dApps. It's really the entire ecosystem. So you have the dApps, you have all of the wallet hours and all of the external. You also have mining pools. It's really the broader Alephium ecosystem. And so out of the around 120 that you've mentioned, I think we have around 50 to 70 that are really what people would expect as that.
So, all right. And when you say it's some between us and community, so it's the dApp that Alephium building in-house, how do you distinguish between that?
So as of today, the only app that we are building our wallets. So mobile wallet, desktop wallet, extension wallet. We also have a toolkit for multi-signature wallet, but it's pretty simple. And the bridge. So the bridge that connects Alephium ecosystem to right now Ethereum and Binance Smart Chain. This is something that we've built. Okay. Everything else right now on AlphLand is built by third parties. But we are, I don't know, I think it might come at some point later in the space, but we have announced that we will be building a protocol protocol-owned dApp. That will come really as a foundation for the ecosystem, bring more yield and, more importantly, utility to the AlphCoin, but also serve as a foundation for the ecosystem to build on top of and next to. So I think maybe you have some question where we can dive a little bit deeper into that.
I mean, my next thing I wanted to ask is, what are the crazy things you've seen? Any crazy dApps or any crazy builders that have come to you or, to the team and said, hey, I want to build it, or already have built it, that is worth sharing?
I mean, honestly, there's really a lot of incredible builders. And I mean, right now, the ecosystem is still quite young. So you will find kind of what you would want to see in a young ecosystem. I mean, we have a different model of dexes. We have one of the most successful dApp currently on the Alephium ecosystem is called AlphBanX. They are kind of a lending. They have their own stable over-collateralized stable coin that is based off of a lending mechanism. So you basically can borrow that stable coin against your app currently. And so that is one of the ecosystem project that has gotten a lot of traction in the ecosystem. We have a prediction market that is currently on testnet, and that should launch on mainnet before the end of the year. So, there was a little hype around prediction markets in the past year, but you can see that this is something that kind of sustained. It's really not what everyone is right now. It's really around DEX. Like the new narrative is really around DEX. But still, you see a lot of adoption and usage around prediction markets. We have.
Did you see about the ICE getting into the poly market? I think they're trying to acquire 20% of the poly market. I don't know if you've looked at it.
I haven't seen that part. I just recently saw, like, in the context of like French politics or something, that they were looking at poly market again. So that's why I saw that, it was still used actually also in traditional media as a, kind of a sentiment
Analysis,
analysis, exactly.
It's huge. I think that was the turning point for me. I thought it's great for politics and everything, but when I saw ICE, which is Intercontinental Exchange, that runs a lot of exchanges in the US, taking a big chunk of poly market, and I was like, okay.
No, I did see this. Now that you, yes, sorry. I'm still, I will try not to make you hear it so much. I'm still a bit sick, so sometimes it takes a second for the information to reach the brain. Yeah, no, I did see that. It's really interesting. And so we'll have our own prediction market. It's called Aura. Aura. Sorry, that the French came through right here. But Aura prediction market. We also have something called WeMine, which is something in a little bit more adapt, more geared around mining, because it's basically tokenizing through NFT mining power to allow people who, especially because Alephium is right now at a phase of ASIC mining. It's not really as accessible as when we were mined with GPU. So that allows people to basically mine at the end without that complexity. And because so right now they will start with NFT, but they also want to look into tokens and things like this, so that they are able to really build an entire DeFi layer on top of that. That could be quite interesting, because at the end of the day, that falls a little bit into, right now I was really surprised. I was at Token 2049 and I just realized that now people put everything in the bucket RWA.
Yeah.
As like financial products are now RWA as well. I found out. I was like, okay, so we really went like anything that is not Web3 native is actually RWA. Whereas my original understanding was a little bit more around kind of commodities and physical goods rather than, but now it's everything.
Tokenization is definitely getting into the RWA. I think we did an episode on Biddle actually a while back. Our BlackRock is getting into RWA with tokenizing securities like the debt, US debt, right? And that's where I think what you're essentially saying, that when financial assets are becoming RWA, that is very different from how it used to be defined in the past.
Yeah, so now RWA is a very big thing, but in WeMine, at the end of the day, it kind of falls under that bracket and maybe a little bit closer to what RWA, at least my understanding of what RWA was used to be, because in the end, they are tokenizing miners. I mean, miners and more hash rate, right? And so those are physical goods that are deployed on mining farms, and there's obviously all of the maintenance that go with it. So that would be quite interesting as well, because I think, again, because a lot of the chain that have a smart contract or DeFi or like this they are primarily in the proof of stake world. There's really a lot more that we can do leveraging the specificity of mining, especially with mining no longer being the evil thing that as it was portrayed maybe 4 or 5 years ago. Right now, you really see mining being a very powerful tool for the energetic transition and many other things. And so I think there's a lot that we can explore this. And I think the right place to explore that is on a proof of work chain, you know?
Yeah. So just coming back to the ecosystem, I guess between yourself and Cheng, right, the founder of Alephium, what are the sort of key metrics you look at to say the Alephium chain is, growing at a steady pace and going in the right direction? Like, are there any metrics that you look at?
I think there's really different things. Obviously, one metric that everyone looks at is always TVL. So obviously, to some extent, this is one, but within your own ecosystem, it's still heavily impacted by, again, price action. So it gives a picture, but it's not always a super straightforward pictures. But you can still see, if you account for the price action impacting it, you can see that the TVL is actually, pretty steady and pretty good. Another, I think there's the number of builders, but I think also something that is really important, again, throughout the market cycle is retention, right? How many of the builders that were there a year ago, six months ago, are still here, still looking to build and to contribute? Obviously, you also have the amount of grant requests that we receive, because that is one way that we, connect with builders wanting to build. And we are, this year, I think, is the year we received and accepted the highest number of grants compared to the other years. The thing that is a little bit tricky, it's always like, as your ecosystem mature, projects become more complex and they take longer.
Yeah.
Like in the beginning, your ecosystem starts from scratch. And so, you have little things that get built very quickly, and that initial growth happen a little very quickly. And that second phase can take a little bit longer, because you now have dApps that, instead of taking a couple of months, take half a year to a year to be built, that have to be audited. And you start having projects that, are set up as entities, and they have to deal with all of the complexity of managing a business, where, sometimes in the early day of the ecosystem, you have a lot of hobby projects that people do on the side and things like this. So those are kind of things that we look at. I think,
I would have thought you're going to say market cap, because I think traditionally TVL is more for DeFi, right? And that makes sense. But I thought, yeah, I mean, traditionally that's what people call, like, how successful is the chain? How big is the market cap? I know it's changed a lot.
Well, I mean, but that doesn't really give a measure. That would be the chain itself, or the project, because it also, like, if you want to evaluate market cap, doesn't really differentiate, like, from a chain, like an layer one or a token project. So that's the market cap gives maybe that gives you an indication of price action at the end of the day. And whether price action is a good metrics of anything in this space true. Everyone has its own KPI and its own matrix that they look at. I think, with everything, no matter the KPI that you look at, it always has to be taken contextually, because market cap there's many factors, like price is a big factor, but also tokenomics.
Yeah.
It's very easy, depending on how you design your tokenomics, to create a market cap that increases very quickly, depending on how you've designed your tokenomics. So it's like with any indicator that you look at, you have to understand how they are calculated and what impacts them, so you can, analyze them and take the learning out of it that you want.
Yeah.
But
yeah.
so, yeah.
Yeah. I think it was more of a joke because I think, like market cap is typically what people consider as a sort of leading indicator, which I don't personally agree on. I don't think is the right metrics, especially early on. When you don't have a very strong community, or the community is just taking shape, right? You don't have a lot of dApps. And it's even early days of Solana, right? We notice it's usually one dApp that actually creates really hype around the chain. And we've definitely seen on Ethereum early days with the DeFi, and then obviously Solana on some gamification side. And I really think it's just one that dApp is going to pop out one day for a newer change that really will set the chain itself. I don't know what's your take on that, but that's sort of what I've seen across the ecosystems.
You also see more and more of this, it's like Hyperliquid was a great example of a dApp chain, right? And so I think Hyperliquid is kind of the name that really comes to mind. But I don't know how much we should quote them before, right? But you also had, the entire Luna ecosystem revolved around a core dApp. It didn't end well, but that's a different story. But so just to say that right now we're seeing this a lot, kind of having that flagship dApp into an ecosystem, but it's not that new. There has been other ecosystems that were built around kind of one core dApp. But this is something that we've seen. You need that one flagship dApp. You have this or narrative, but usually that narrative centers around one main dApp. Solana is with the gamification, the meme coin and everything. I think Injective also is doing work around this. And so that's also something that we've noticed and that we've taken to heart. And this is why in our past the Danube upgrade, one of the big things we're focusing on is a protocol owned dApp. It has different things. The first thing is, obviously you see this being very successful in other ecosystems, to kind of have really that anchor into your ecosystem that kind of feeds and serves as a stepping stone for everything else into the ecosystem. But then there's also, as one of the very few proof of work chain with a DeFi ecosystem, I think I'm pretty sure this is the question we've been asked the most since the creation of Alephium is, where can I stake my Alph?
Right.
Which you can't natively at the chain level because we're proof of work. But by having a protocol owned dApp, we can actually introduce staking at that dApp level and bring yield and utility. We also see this as an opportunity to activate a big part of our ecosystem that isn't into DeFi, because right now we have already a lot of option into the ecosystem, but they are all, for someone who has never touched DeFi, they may be a bit overwhelming because, in some case you have to think about what is impermanent loss. Then you have, you have collateral, liquidation risk, and this is all stuff that can be very daunting if you've never touched into that side of things. And so what we really want to do with this core dApp is lead by example by building a core dApp that really leverage all of the technical specificities of Alephium. It will start as a DEX, a clam DEX, and all the fees will be used half of the fees will be used for yield for people who will be staking Alph, and the other Alph will be used for buyback and burn of Alph. So it's kind of an opportunity for people to deploy their Alph into the DeFi ecosystem, receive yield from the fee of the DEX with relatively low, let's say, more palatable risk than maybe more advanced option. And it's a great stepping stone. Yeah.
So this is a new sort of initiative. What about competing with the other DEXs?
It's a different model. It's a different DEX model. So it doesn't really address necessarily the same needs. And at the end of the day, if you look at any ecosystem, you have multiple DEXs, multiple DEXs everywhere. So the idea is really to have a foundation. All the code will be open source, audited. So really so that people can easily build on top of. And there's also just the reality that we've seen. There's a number of stakeholders in our ecosystem that don't feel comfortable, again, starting their journey into Alephium with third-party dApp.
I see. Brings trust.
Third-party dApp. Yeah. And I think one of the big difference is, again, because we don't have, because our token is Alph, basically, for the DEX, it allows us to do things a little bit differently. But the idea is that other DEXs, and more importantly, other DeFi protocol, can really build on top of this. And you can have strategies that then combine the best of different models. Because the other DEXs that we have, they will be Uniswap V2, they will be V3, but slightly different clam model. Also V33. So it's different models that have different trade-off and appeal to different things. And I think what is important is how can they be integrated in broader strategy. And the point is also, we need an entry point for all the people, because it's always about how do you get, there's two aspects, right? It's how do you get new people into the Alephium ecosystem? But there's a second aspect that is just as important, is how do you activate all of the people that are in the Alephium ecosystem, but not active in it? It's like, how do you, activate them? And therefore, kind of create the funnel that leads them to the rest of the ecosystem, the broader ecosystem. And again, give the opportunity for all of the other builders in the ecosystem to build on top of this or integrate this as part of what they are building.
Yeah. And also, I think it sort of brings excitement, which is perhaps sometimes underrated. Because if people just hold the token and there's nothing happen for a couple of years, they sort of lose interest, I think, and it sort of brings this value where you can now do something with this asset. It becomes a utility in a way, while, instead of just holding it.
Exactly. And that's part of this. It also allows us to kind of address a lot of requests or questions that we've had throughout the years. Is like, again, can I stake Alph in a way that is as straightforward as when people stake ETH? Because right now the answer is like not directly, but you could provide liquidity, but be careful, you have to provide the other side. Another thing is, obviously, because we're still early in the time of the chain, even though as a lot of the development effort and a lot of the decision on the evolution of the ecosystem relies on the core developers, and that's something obviously we want to give more power to the ecosystem, and more importantly to the long-term holder of Alph into the direction. And again, that core app allows us to do this, because with the introduction of Alph staking, you can then leverage this to give, if you stake your Alph, you are able to vote, for example, on certain ecosystem initiative. And so that's something we want to kind of try with this, because I think governance is an incredibly complicated topic. I don't think anyone has solved it properly for themselves, and a solution that works for one will not work for someone else. So the core app will also allow us to kind of initiate the first try of giving more power to the ecosystem and see what works for our ecosystem.
Let's carry on with the discussion, and the area I want to focus perhaps next 5 minutes or so is around the stats, which is always exciting for people to know, and I'm sure communities are already across it, but I'm not, so I'm looking forward to learning myself. So I wanted to start with what is the ecosystem looks like in terms of user base, wallets, anything you perhaps have handy, transaction volume.
What I can say, the number of addresses, so active addresses. So an active address is basically an address that has transacted on chain. Like it needs to have at least a transaction. So it's been consistently growing since the past year. So if I look before the Danube upgrade, we were at around 365,000 active addresses on the network. And right now we are over 390,000 active addresses into the network. And it's been, it's been a pretty consistent growth. Obviously we had I'm seeing now on the board that we had a pretty big increase of new addresses created just before the upgrade. I'm trying to see if I can. Yeah, with some days where we had over 2,000 new addresses or wallet being created. I think I haven't looked at the latest wallet download stats, but we have, I think on the desktop and mobile wallets combined, we have over 100,000 downloads, even more so.
That episode with you, right? Before the Danube upgrade, maybe it was because of us.
It could be because it was on the 7th. I just checked now. Oh, maybe it is you. And so that would be great. That would be really great. We've had, what other stat can I have for you? I think so. I want to check the transaction. So we have around. So here I'm talking about, this is the transactions that don't count what is called coin-based transaction. So this is without the
miner,
the mining transaction, basically. 70,000 transaction over the past week. What do we have? There is over 1,000 contracts that have been deployed. There is 463 NFT collection deployed. And actually, you were right. There is 1,320 token deployed. Yeah. And 37,000 NFT that have been deployed.
So roughly close to 400K wallets, which have been created, which is active wallets as you define them, more than one transaction. So close to 390, right? You said close to 400K.
Oh, and I think, wait, I have to check just one thing. Oh, sorry. The amount of contract, the 1,000 contract deployed, that was just this week.
Oh, just this week. Right.
That was just this week. Sorry, because I'm just playing with the board. Over the previous year, it was 156,000 contracts that were deployed.
Wait, so out of 120 dApps that you have, they've deployed.
One dApp can have multiple contracts. Like if I give you the bridge, for example, on its own, I think the bridge itself probably has around 10 contracts.
Yeah, but still, I'm thinking because a dApp, a DEX would only have, I don't know, maybe 10 or 12. So even if you have 10 dApps, you're only looking at 100.
I know, I'm very surprised. But out of the 156 that have been deployed, 56,000, 78,000 have been destroyed.
I see. So maybe they're just upgraded to a different smart contract.
Yeah. But I mean, even if you do 156,000 minus 78,000, that's still,
70-ish.
That's still like 70,000 contract deployed in the last year.
That's a great number.
I guess there's a lot more. I guess there's a lot more people playing around with the Alephium contract than I thought. Because I thought the 1,000 was like forever, but actually it was just the last week.
That was just that is a big number, I must say, because I thought 1,000 is a big number. Yeah, same as actually I thought for a new chain, for a new
yeah. I mean, everyone can check those stats. They are, AlphLands that you mentioned before kind of list all of the stats stuff, and this is a graph on a dashboard. It's interesting. It also tracks the amount of alph that have been burned. So there's pretty cool stuff there.
Anything else you're looking at in terms of just the metrics like transaction volume? I think you mentioned.
Yeah, it's pretty stable. I mean, right now, if I look on the Explorer, it counts all of the mining reward transaction, and because we've reduced block time, there's a lot more transaction because they happened twice as fast, right? Someone in the community who is running it and making it available to everyone. So you can, from Alphland, here I'm on Alphland. You can see there's been a lot. If you go, I think it is in the stats one, stats, you can go to the, where is it? No trust verified dashboard, and which is
Right.
that's basically where I am now. And you can basically play around. And so here, integrate Coinbase is false, meaning this is excluding all of the mining transaction. If I put it will, once it updates.
Yeah.
Yeah, you see the number of transaction is very different. And you can see, so I will remove them because again, I think that's not really representative, but you can see that's the number of events. This is the number of contracts deployed in the last 7 days, number of contracts destroyed. And again, you can change the time period to see, and you can see the NFT, the contracts, the number of live contracts. So this was made by the community on Alphland. You can find the no trust verified dashboard, which I was sharing before in the statistics, in the stats somewhere here. Yeah, in the stat filter, but here you can see really everything that you have available in the ecosystem, from dApp services, wallets, mining pools. So you really have a good overview of the Alephium ecosystem. This was, the stat with the rich list that I thought I was showing, where you can see the active addresses. That's the purple line here. And you can see that today we are, if I manage to get to today, yes, above 390,000 active addresses. Then on DeFi Llama, you can see the dApp that contributes to the TVL currently of the Alephium chain. And yeah, and our Explorer also has a few stats that are interesting to monitor as well.
So within the dApp ecosystem, right, there's plenty happening within that ecosystem, from DEX to lending protocol to RWA.
Yeah. We have the team from Links that's already done a few other dApps or the dApps in our ecosystem. They are, I think, about to be ready with a Morpho-like lending protocol. Yeah, no, there's really a lot of things happening.
Yeah, especially for, I guess, a Turing complete blockchain. I think dApps is the lifeblood, right? It's the lifeblood of the ecosystem. You have to have dApps, especially in the DeFi space, I think.
Yeah, I think DeFi is, at the end of the day, it's the vertical of our industry that has the most proven adoption or lasting adoption, as you were saying, 100%.
What are you seeing across these dApps, right? Like, given that these dApps exist, when you talk about Uniswap to SushiSwap, right? Or on the lending side, you have Aave, they already exist. So when these builders come to Alephium, what are they seeing that they weren't, or what are they getting on Alephium that they weren't getting on other chains like Ethereum?
I mean, I think there's different things. If you talk about new builders, I think one of the benefits you have in building in a smaller ecosystem is attention. Because right now, if you go in the more the bigger ecosystem, you're competing for attention within that ecosystem with a lot more eyes. So I think it's attention, its ability to capture market share. Obviously, it comes with challenges. We're also, the challenges of a smaller ecosystem is always that in some aspects, they're going to be limited. It's a smaller ecosystem, so you have maybe more work to do to acquire a user outside of that ecosystem if you want. But within that ecosystem, you get a lot more attention, and the cost to get that attention is usually a lot lower, because like if you want to grab attention in a Solana or BSC ecosystem, your marketing budget is probably not going to be the same. And so there's this aspect, something that is true for any builders, whether we're talking about existing protocol or new builders. I think security. I think right now, EVM chain are the norm, and right now they are still attack vectors that get exploited the same again and again and again every day. And this cannot be the infrastructure where we onboard the rest of the world. It can't be. And it doesn't mean that EVM can't evolve or that it won't solve those issues. They might, but the point is those issues exist and there needs to be alternatives, there needs to be improvements. And I think this is really what Alephium offers for builders. It's an environment that where the technological choices that have been made to optimize security. And it's not to say that, you still have to build properly, you still have to edit your code, but there are the known attack vectors have been mitigated. The entire environment have been thought so that it's hard to make mistake, so the surface for mistake is reduced so that builders can really come here and do what they want to do, which is build, innovate, versus spending half of their development budget trying to protect yourself against attack vectors that you can't really protect yourself against anyway. Otherwise, they wouldn't be happening every day. So I think there's a lot about this. And then this part is maybe a little bit more philosophical, and so that's not for everyone. It won't appeal to everyone, but for people who believe that proof of work is the best way to ensure a decentralized infrastructure, it's also a place where you can build all of the DeFi, all of the decentralized applications, whether it's DeFi, gaming, RWA, whatever vertical you're building on. If you want to build it in a decentralized infrastructure and you believe that proof of work is actually the more robust way to ensure that decentralization, this is also something that we offer that not many other chains would offer you. And especially if you combine everything together, like that level of security that you cannot find on any other chain, with that even if we have our own language, it's optimized for builders. So it's really easy to grasp. We never had anyone who had problems to learn it because it's very close to Rust. And again, it's been designed in a way that is very intuitive for builders. And all of this on a performant proof of work chain. So I think it's good.
Yeah. And I think also perhaps a point I was thinking is it just serves a purpose, for underserved community, perhaps, right? Because if there are no dexes, then it's better to be a dex on a chain that doesn't have a dex than a chain like Ethereum that has 100 dexes, right? You don't want to be 101st. And it obviously, as you said, brings utility and it creates an ecosystem in itself within those dApps, and then obviously goes on from there. And again, we've seen this plenty of time happen across different ecosystems. So it's sort of serving that purpose. Now, quickly, what are sort of the top apps within the Alephium ecosystem, right? Just throw some names at us.
Oh, I can't top because top is a very subjective measure. I can tell you the dApps that right now people are talking the most about, which is not a measure of this. So again, I think AlphBanX was really one of the most anticipated launch, and it's today one of the most used apps. We have WeMine, WeMine, Aura are about to launch on mainnet. We have I think our launchpad, AlphPad has been a very consistent pillar in the community, and they are preparing a next round of evolution for the launchpad as well. We have Links, who built already several services and dApp in the ecosystem that are finalizing a Morpho-like lending protocol. We have, now you put me on the spot, and everything is like, recently we had like Learnify, which was a gamified learning platform that integrated Alephium, and actually the Quest, kind of I don't call it Quest because that's the name that comes to me, had really a lot of success in the community. We also have some of the decks, Dead Rare, NFT Marketplace. dead rare is the NFT marketplace. On the DEX side, obviously there's been the core dApp, which right now doesn't have any name. I don't know if it will have a name. Maybe it will just, I don't know that part. We have also, recently there was someone that was pretty cool that did something called Vault Pay, and basically to allow you to just create with your Alph, but he also supports a lot of different currency. You can buy gift cards, so Apple Pay gift or prepaid card, so you can really easily convert your use your Alph to have a prepaid MasterCard that you can use in the real world, or any like coupons that you want, or gift card like Amazon, Apple Pay, and all of that. That was pretty interesting. Also, sorry, recently we also had with AI and things like this, we had a lot of we had several platforms to help builders. So we had Encoder that helps you translate your Solidity code into Alph, which is our smart contract language. We also have a number of other tools that would also assist developers into the ecosystem. We also have our own meme coins that we're getting are really, really funny and have a great community. It's just so hard to pick, because I just want to make sure everyone is mentioned and know their work is seen and appreciated. I think this is also another benefit to joining an ecosystem like Alephium. And this is something, because we spoke about it in our previous chat, that we've had several network upgrades throughout the years. And a lot of the features that were included in the network upgrade came from builders' feedback. So a lot of because our approach was always to start small and build as we get usage and feedback. So all of the evolution to the virtual machine, for example, in the smart contract language, a lot of it comes from builders giving feedback and that feedback being integrated and developed. And I think, especially in our space, being part of a community and seeing the impact that you have on a community and on a project and the direction of the project and the technology is really important, especially as a dev. It's nice if you can shape the infrastructure that you're building on. And so I think that's something you can do on Alephium that's probably in other or bigger ecosystem, that's not really something you can have an impact on.
That's very cool. Thank you, I guess, for all the names you mentioned. Again, it wasn't to catch you off guard here. It was really to tell the community and, the listener.
To check, because otherwise you're just left and you don't know where to start. So the name I mentioned are good places to start. There is more. And actually, really, I'm glad we got to talk about the ecosystem, because it's really, again, I think fostering and growing and nurturing an ecosystem throughout market cycle, it's really the biggest challenge for layer ones. And we're really taking this seriously. We actually recently hired someone so that to be the head of the ecosystem. And that means that she is, she's been there for a month now, so only recently. But our entire focus is like, how do we nurture the ecosystem? Because this is really a priority for us, and we want to really support builders, create synergy within our ecosystem and outside our ecosystem, and make sure we have everything available for builders to come on Alephium. So, I mentioned hardware wallet, we have Oracle. With actually the Oracle on Alephium just recently launched RWA oracles as well. So we had price oracle, randomness oracle, and now we have RWA oracles as well. For more institutional use cases, we have a custody solution called Prime Vault, which actually WeMine, the project that I mentioned, is actually using as part of their project and infrastructure. It's a key component of their offering. And so it's really important for us to support the ecosystem, trying to give it visibility. And I do hope that out of the project that mentioned, you get an opportunity to chat with some of them, because they are pretty awesome.